Welcome back to Squawk Box. ADP reporting that private payrolls gained just 374,000, a disappointing 374,000 for ADP for August payrolls. July revised down to 326,000. That was a huge miss for ADP, with the government reporting more than 900,000. Okay, so goods sector did 45,000. That's okay in a normal world, not in a rebounding post-pandemic world. Service sector, 329,000. Again, very strong, but not as strong as we saw in the BLS report last month. Non-farm payroll estimate for this Friday, 720,000. So again, ADP coming in very weak. Looking at it by business type, 86,000 gains for small business, 149,000 for medium, and 138,000 for large. So it was spread across different types of businesses, but just, again, not enough relative to the estimates that were out there either for ADP or BLS. Again, you look at it by industry, leisure and hospitality doing its part, 201,000, but that is off the pace that we've seen before. Education, health services, pretty good across the board, gains by sector. But again, just not enough relative to what was expected out there. A word of caution, Joe asked about this in the last hour. So here we go. Here are the error rates for ADP. We looked at it over the course of the pandemic, the last 3 months. What you see is that before the pandemic, ADP's error was 65,000 per month on average. During the pandemic, if you take from March 20 on, it's 851,000 a month, which is huge. These are absolute errors, by the way. And recently, it's come down to just to 337,000 a month. And so it's been just way off, very difficult for a lot of indicators, not just ADP, to figure out what's going on in the economy during the pandemic. And very quick, if you look at it, the month by month, the two line charts, what we're looking at here, by the way, is as first reported, not the revised numbers. You can see it's up some months, it's down some months, but it's just all over the place relative to trying to predict BLS. So, Joe, put that in your pipe and forecast it.
I'm putting it in yours and throwing back to the high frequency data. The high frequency data that you talked about earlier, the ADP number that we have, and now the whether it's been accurate or not in recent months. So put all that together, and what do you think for Friday?
You know, I think you have some downside risk here. I wouldn't be surprised to see it in the 500,000 or 600,000 range. The key here, one of the keys, I think, Joe, is going to be that we are expecting a big influx of education workers. Unclear to me that ADP would actually pick that up. That could be on the government side. There is some, obviously, private sector education workers. But it's all very weird. We can't compare it to a year ago. We maybe should go back to 2019, but that doesn't really work. It's been very difficult to understand. Plus, you've got the drag on Delta. ADP saying that it's put a dent in the job market or in job growth. So it's just all over the place. It's been very difficult to figure out. I think, Joe, if you take a step back and say the market's general opinion is that things will get better. We don't know when, and we're happy, it seems to me, to say, okay, if not this month or next month, then 3 months from now, it will get better.